wanted to talk a little bit about how lenders are opening up to lend now with traditional lending and what that means. And we want to talk about, Trev, do we want to get into now what is a COVID impact statement?
We do. I just want to hit on something that you just used the word traditional. I was talking to somebody on
yeah.
I was talking on the phone with one of my friends the other day, and months ago we were still calling it the new normal, and we were like, when things go back to normal. I don't know that anything's ever going to go back to the way it was. There's so many things about the world in so many different aspects that have COVID has kind of exposed the soft white underbelly, if you will.
Yeah.
And traditional lending, I wonder if we'll ever see that again.
Well, but since we have had many conversations with lenders, with prospects that we have, and business owners who are either expanding or they're buying a business in the middle of a pandemic, and the lenders, as we talked about it last week, there are lenders that we've talked to that are interested in these accounts that we have brought to the table. So but there's a big but, right? But they're asking about how is this business going to survive in a pandemic?
COVID impact statement, to go back to your initial question. It's a new item included in the loan application package, and we've been kind of cheerleading about it for several months, long before we heard lenders were asking about something called a COVID impact statement, or even knew such a thing might exist. We've been saying to business owners for months, since our initial conversations with them in March and April, when they approached us about how can you get me some disaster financing, thinking like the lender in my head that I've been for 30 years, I was asking these business owners, what's your plan to get through this? Because Linda Ray and I created our COVID impact statement literally on March 18th, 2020. The day after St. Patrick's Day, the day after Governor Lamont here in Connecticut locked down the state of Connecticut. So we pivoted, and we came up with concepts and ideas which we have so far very successfully implemented to move our business into a COVID impact resiliency. So in those conversations we've had with business owners that we've helped to get disaster financing, so far about 2.5 million, boom, boom, boom.
Yeah.
We have been asking that question. A lot of business owners have been unable to answer that question, mostly out of their desperate times. I mean, we are talking about most of our clients came to us back in March, April, when literally the sky was falling.
Yeah.
So maybe now is a moment of sobriety and calmness and tranquility, if you can find those words to use today while COVID continues its pandemic status, to think about what is your business doing right now and what is your business doing going forward that helps your business survive an ongoing pandemic. Now is a moment. And so with COVID impact, it's the same concept. You need to convince a lender that you have what it takes.
Right.
Because as skeptical as lenders are in, what we previously called traditional times and traditional lending, lenders were apt to say no. They look for a reason to say no because they're assessing risk. Well, the risk now is not only a more stringent, heavier type of risk for the lender, but also it's literally the other end of this is completely unknown. Yeah. Does this thing end at 3 this afternoon, or does it end 3 years from now? So the lenders are taking their normal risk tolerance and really pounding it on top of business owners, so much so they're cutting out whole industries. But the COVID impact statement is something that you have to really think about. You cannot just say, well, I opened up a patio outside my restaurant where the parking spaces were, and I put 5 tables out there. Not cutting it.
No, I mean, and this actually goes to, we pontificate a lot. In fact, this WTF series like for me, we used to talk about a myriad of different business conundrums, and it's all been about disaster financing, and the nuances are many, and the depth of the confusion is deep. Is that redundant? Anyway, so it kind of has warranted, I know, it kind of has warranted going over and over again a little bit of what seems to us like the same thing. But there's new things we're learning every day.
Linda, the disaster is ongoing. I mean, it's
Well,
still
yeah.
happening. I mean, now, a headline I saw last night in the New York Times is that colleges are suspending students for violating their COVID, prevention, or whatever their COVID strategies to help people stay healthy. And we're seeing numbers changing in different directions. Things are getting better. Things are getting worse. And flu season is just around the corner, and there's still no sign anywhere that a vaccine is anywhere close. So what? Now the latest thing is you can be reinfected.
Yes, but what I was saying before, but I lost my train of thought, was that we've been pontificating about how, and this was pre-COVID, where the business plans were non-existent for a lot of business owners that were seeking financing, legitimate businesses looking for legitimate financing for legitimate reasons in traditional times, and they didn't have business plans. So now the thing is, I mean, we have been harping more than ever on how critical planning is with forecasting worst case scenarios and alternative planning possibilities. And just, the banks are looking for that. They need to know that you're going to pay back the loan.
The phrase narrow-minded, narrow view comes to mind when you say that, Linda. We got a call yesterday, 2 days ago, as we were in Walmart buying. By the way, everything we bought, I'm pretty sure everything we bought was American made. How about that? Yeah. Because we were outfitting our office, which we have now decided to use much more often, including
it only took 2.5 years.
Including a new coffee machine. And by the way, today's coffee, Linda, is quite excellent.
Yeah, I'm pretty good.
So we got a call from a CPA, a good friend of ours, Joe Paldino, CPA. He had a client, has a client who owns a trucking company, and her question was about utilizing the EIDL funding in terms of how she was going to use the money. And it was about buying a truck, which to us seemed a reasonable use of the EIDL money because it's helping her to survive her business. Because with the truck, she can potentially get more business coming in the door, and can pay her bills and can keep employees employed, and so on. But when I say, going back to what a moment ago, narrow-minded or narrow focus, I mentioned to him, well, if she's got a substantial amount in her EIDL funding, I said, has she considered using any of the money for marketing expenses?
Wait, do I have sound effects for crickets? Damn it, I got to get sound effects.
So again, going back to COVID impact statement, going back to the pivot, going back to business planning and preparing for how to survive today and how to survive in a long term through this thing, which we don't know when it's going to end. You have really got to climb that mountain in the Himalayas and go and find that monk that's up there meditating, and you have to expand your mind in your business planning and be as creative as Picasso.
I know you could go on and on, but let me just stop you right there.
Hello, Tim Sohn. I'm painting a Tim Sohn portrait right now.
Tim is jumping off to his Tim and Jim show, which I'll be joining momentarily. Let's talk about the things that the business owners can do, that what the lenders are looking at, that the business owners should be very mindful of how they proceed. We have a little bit of a list. We have credit scores and substantial equity investments. What's the valuation? What's the experience of the business owners? I mean, these are all things, there's a lot of things you already know that you could be starting your business plan to have it ready for What the bank is looking for is the COVID impact statement. These are all elements of it to assess.
If you have your business plan that has addressed these issues, then when you're applying for business credit financing and you have to fill out a COVID impact statement, you literally just have to open your business plan.
Yeah, and there it is. Yeah.
And, pick out the phrases and the sections and the paragraphs that are applicable to your COVID impact and put it into the
By the
statement
way,
and file it with your application.
I like how when you open that, there was a blank page on the top, which is how most things start. It's blank, which is a blank canvas, which is you can create it and get as creative as possible with how you plan to run your business. Because a lot of business owners that have been around for a long time, there are many, many, many business owners that are going to make this and they're going to come out stronger and they're fierce with their business. There are other business owners that might not be in the game for as long. So there needs to be some attention to detail if you want to not just survive and you want to thrive. So it's time. Now is the time. We've been talking about this for 3 months. As business owners get back to business, businesses start opening.
Let's go back to the lending standards.
Yeah.
As difficult as it was to get approved for business financing pre-COVID.
Yeah. Oh boy.
You cannot imagine how immensely more difficult it is now. So underwriting guidelines, we got on the phone with one of our lenders last week about a couple of scenarios, and the first words out of it, and this is someone we have closed some very difficult financing deals with, and she's amazing. She's awesome, and she works for a great bank that has a culture of making the deal. And first words out of her mouth were, "These are so challenging times to get anything done in terms of loan approvals." So underwriting guidelines are tighter. Credit score requirements substantially higher, which is bizarre because if you think about it for a minute, a lot of people, especially sole proprietors, are probably impacted directly on their credit report due to the COVID pandemic and inability to make a payment on time with something. But credit score requirements substantially higher. Substantial equity investment. If you're buying a business, if you thought you could do it with 25% down, anticipate the bank's going to come back later and say, you know what, we feel more comfortable you put 30 or 35% down, and maybe more. And then if you are refinancing a business or if you're buying a business, what's the valuation of the business? What's the value of your business above and beyond, your cash flow and or your other debt on that business? That's the, the value, the equity value. Last but not least is the experience of the owner or owners of the business, the experience of management.
They
want to know that
you
you have deep experience.
Right. And this is not a time to be humble. Even if you've got to maybe hire a PR person to help you write a resume or a press release kind of format, so you have something that you can insert and not leave out things that you are a little shy about or don't think that are relevant. You need to actually really take this seriously on what the value you bring to the table with your
relevancy
experience.
Is very important. We were on the phone with a fellow yesterday who is interested in buying a FedEx route, and that's one of the financing products we have available through our network of lenders. And knowing what the lender is going to ask for, because we had a conversation with them about a similar financing last week, I asked this fellow, I said, so what's your relevant experience? He has no experience in the logistics transportation field. So I thought that might be a challenge, but he didn't hesitate. He's an ambitious entrepreneur, and he came right back and said, I do have substantial management experience in complicated business matters on the corporate level and on my own businesses. And he kind of described a resume of experience that, while it doesn't apply directly to logistic transportation specific to this business purchase he wants to make, it's certainly something that we're going to use and add some heft to it in his business plan that will help us to sell that experience to the lender.
Let's move on to another question that we've heard, which is, what about startups? And what no? I mean,
no words.
So I guess the ambitious entrepreneur who wants to, I mean, listen, there's got to be a difference between maybe an experienced entrepreneur who has started many businesses. Maybe they're starting something related to what they were doing.
You know, I am the eternal optimist about everything, and it's why I had a very successful career in mortgage banking, because I don't take no for an answer, and I always believe there's a positive outcome possible.
Mhm.
And my experience tells me every individual situation has its individual unique characteristics. I would say, generally speaking, this is not the time to consider applying to a bank to get money in a loan
For
to
a
start up a
startup.
new business. On the other hand, you know, if you came to us as your broker and we dug deep, you know, we would be looking for, and this is what you want to look at when you're presenting your unique experience and situation to a bank for credit financing, is to say, while I am starting up this business, you know, I have all these other businesses I already have and or experience that, you know, you have got to alleviate the bank's
Yeah.
fear
Trepidation.
of
Mhm.
risk, the bank's terror of your
Yeah.
inability to make the payments. They are literally saying those words to us on email
Yeah.
and phone, saying, we need to know they can make the payments. How are they going to make the payments?
Well, especially after COVID, I mean, it's still happening, but especially with all the deferments that some of the banks have made, the concessions of deferments, now they're like on top of it. If they're not getting paid on some of the loans because someone needed a reprieve, they're now looking at, well, what about how many other deferments or lack of new payments coming in can we handle, right? Because I mean,
Well, our
it's not a
banker that we
not-for-profit.
our banker last week, who works for a very large regional commercial bank that, as I said, we've done a lot of business. She said we are seeing the defaults
Yeah,
flooding in the front door now. The defaults are starting to hit, and it's still, relatively speaking, early days. I mean, we had this giant stimulus rush from Congress, the EIDL program, the PPP program, unemployment additional benefits, et cetera, lockdowns that worked. You know, carefully managed reopenings in some states and some municipalities and so forth. And yet, in these early days, the defaults are already rolling in.
yeah.
So you have a lot to be concerned about if you're applying for business financing. And so that's why when you ask me about startup, I would say, I mean, we're happy to talk to you about it and give you our experience on what we think. But
Right.
and if we think there's enough heft in your idea and
Mhm.
your experience and your ability to make the payments and so
We
forth and
have
survive,
resources.
we'll have conversations with lenders on your behalf. That doesn't mean they're going to lend you the money. If you're on your own, you know, you need to be rock of Gibraltar, you know,
Yeah.
rock solid.
Well, just to conclude this week's WTF, couple things, still no new stimulus money. So if you are looking to secure some financing for your business for whatever the reason you think is a viable reason, you know, we have access to resources that, you know, just to talk it through with you, number one. Number two, next week, we're going to actually bring up a question that just happened this morning with a CPA confidant, and he basically he's got clients asking like, how can I use the EIDL money? So we're going to approach that next week. So stay tuned for that.
And the week after that, unless of course some major change happens in Washington with regards to stimulus, the week after that, we're going to talk about industries, lending products that are not disaster lending products, that are resilient type of products available to an existing business, a type of business in an industry that can thrive and survive through the pandemic. We're going to talk about those industries and the financing that's available to them right now that is not disaster financing.
Well, also, Trevor, you don't know this, but I put a poll on LinkedIn, and I tried to put it on Facebook, but Facebook was a little wonky this morning and it didn't post. For anyone who's been following our weekly videos since almost a year ago, the first week of September, which is, oh my gosh, next week, we were doing pre-recorded, edited videos. If anyone followed If Then Thursday and Finance Friday, but with WTF Wednesdays, they started out pre-recorded and edited, but then we went to live because post-production is a lot more simple. So I have a poll asking, do people think we should continue live or should we go back to pre-recorded and editing? I was talking to Tim Sohn. Well, Tim and I were doing a Facebook Messenger, and I think he said without saying that they were a little more entertaining than the lives.
I am currently reading Tom Harris's Red Dragon, by the way.
What does that have to do with anything?
Nothing. Gotta throw that in there.
All right. Well, anyway, I'm going to be putting this poll out there for anyone who knows our weekly series. And hello, Andrea. Nice to see you. Lori, BFF Lori is with us. That is crazy. I don't think I've ever seen you on a live. Hello, waving hand. So we're going to look to... I'm going to see if we should go back to pre-recorded. I mean, September is the new January. So I'm kind of reviewing our video marketing efforts. Tell me you have not heard that. That is a fact. It is the new January. So I'm reviewing our video marketing efforts and wondering if we should go to pre-recorded, edited, or stick with live.
Which is your way of telling people to answer the dang poll.
Yeah, answer the poll.
Give us their feedback. That'll help us make decisions.
Yeah, I mean, I actually love doing the editing, and it is a lot more fun to watch the videos that are pre-recorded and edited. But, hello, Runner Harold. Nice to see you. Thanks for the thumbs up. All right. Well, it's been fun as per usual, even though Lori says both, that we should do both. I thought of that, and then I thought of all the work that it would take to have, but we did do 2 weekly videos last year for 6 months. We did 2 weeklies. I do love the live, but I also love the pre-recorded editing. I just have so much fun with the nonsense I can put in there. Well, this has been really fun. Thanks for the new people chiming in here this week. I really appreciate it. And thanks if you are finding us on the replay. Please give us a thumbs up if anything was useful with the COVID impact statement, the almost nothing that we talked about startups.
Subscribe to our YouTube channel and hit the bell so you're reminded every time we post a new video.
And we just want to say thank you to everyone. Stay safe.
Thank you.
Stay healthy, and come back every Wednesday, 11:35 a.m. WTF. Have a great day. Bye.